Welcome back. Let's now put the focus and the spotlight on the metal space as global worries weigh on the commodities market. Aditya Welekar, the Senior Research Analyst at Axis Securities, joins us now. Good afternoon, Aditya. Aditya, there's been a lot of news flow over the weekend in terms of Russia being asked to stay away from the LME exchange. A lot of news flow in terms of price action in the commodity space. How have you seen that? Number one, and main question is that what has been Russia's contribution in that particular exchange itself, and what will be the derivative impact that you see on Indian companies?
Yeah, so Russia almost contributes 6% of global aluminium supply. So that's a sizable number, and 5% of global copper supply. So the impact will be mostly on the supply-demand disruption, but it will be a short-term impact. Over a medium term, this Russian metal will be flown to the trade import barrier neutral countries like China. So the metal will flow to China at a discounted rate, and the supply-demand balance will be maintained. But near term, we expect a volatility in aluminium and copper prices. So since yesterday, so today aluminium prices have increased to level of $2,600 per ton, and we expect this to remain slightly volatile in the near term, maybe at an elevated level. And then as the trade supply normalizes, we expect the prices to slightly settle down in the range of $2,400 to $2,500 per ton.
Okay, Aditya, thank you for that. If I may also ask, what is the contribution in terms of nickel? Because as you said, aluminum is around 6%, copper is around 5%. Is nickel also a big contributor here? And secondly, which are the stocks which will be in focus in case you're talking about short-term volatility? Is this something that the investor should keep on their radar in terms of movement?
Yes, nickel is also, Russia is a major producer of nickel, and 6 to 7% of supply globally of nickel comes from Russia. Norilsk Nickel is one of the major nickel producing company in Russia. So we expect a significant volatility in nickel prices. So from a stock perspective in India, we see this overall the setup for base metals is very positive. So we have seen recently that aluminium prices have increased from the level of $2,200 to $2,500, $2,600 per ton. Then zinc prices, copper prices have also increased. So there are a host of reasons. Number one is it the PMI prints from China. Those are slightly on a positive note. Then there are some production concerns in Yunnan region, so that was supportive for aluminium prices. And the trajectory that the Fed will reduce its interest rates going forward. So all these were favorable for this base metal pack, and that has all these host of reasons have flowed in as a positive news flow for this pack, and aluminium, copper, zinc, all these prices have found support. And this is mainly beneficial for Vedanta, Hindalco, Nalco. So all these base metal companies, the share price have also reflected the corresponding increase because of all these positive news flows in the past month. And I think we further foresee some valuation comfort with respect to Vedanta, because fundamentally also the company has levers, like they have deleveraged their balance, they have restructured their debt, and the kind of commodity basket they have exposure to oil, zinc, then aluminium, and all their expansion projects will fructify in FY25. So Vedanta still look, even at this level, it has some levers and legs to go up from at this level also.
Aditya, just to come in there, can you or would you be able to give us a sense of the sensitivity analysis in terms of what will be the impact on, let's say, a Vedanta, a Nalco, and a Hindalco, with every jump in aluminium price that you're seeing? And you said that at current levels you still see valuation comfort as far as Vedanta is concerned. Your view on Nalco as well as Hindalco?
So Nalco is pure play aluminium and alumina play. It's the only company which has exposure to alumina. So alumina prices have also slightly increased. Hindalco is a combination of aluminium and custom copper. So Vedanta is a conglomerate. It has exposure to multiple base metals like zinc, aluminium, oil, and then it has also exposure to steel. But most of its commodity exposure, that is oil, base metals like zinc, copper. So all these are in a positive trajectory. So Vedanta has more levers to play out, and as I said, its balance sheet is also, we foresee that its debt restructuring will happen, and that gives some comfort on its valuation from valuation perspective. For Hindalco, the only monitorable is the uncertainty towards Novelis IPO, that we have to understand from the management that how they use the proceeds from the Novelis IPO. So that may act as one of the key monitorables for the stock going ahead, and also potential risk if the outcome from that IPO is not against our expectation or favorable. So that's our view overall of the base metals.
Okay, all right. Aditya, thank you so much for joining us today. We had some more questions, but we are out of time today. But thank you so much for joining us and making sense of the rally that we are seeing, or the volatility, I would say, in some of these metal prices and the geopolitical setup as well. We'll do one thing, we'll slip into a break. As we do that, we have an announcement to share with you all. We are launching CNBC TV 18's first ever